What's up, people? It's your boy Trader God. You know, letting the music play. You know, we got a couple minutes for my guests come on. How everybody doing today? Tonight's lesson, we're going over how to read a financial statement, how to understand a balance sheet, fundamental analysis. Remember, people, we gonna make it, man. That's the motto of Trader Die, yo. That's our motto. We gonna make it. This market, I keep stressing this. Even though we're in a downturn or a bull market, I'm sorry, a bear market, bull market is an upswing. We gonna make it. The market bounces back. It always bounces back harder. All right, people. So tonight, I promise we're doing fundamental analysis. Now, as I said on the previous podcast, fundamental analysis, it's like reading the snapshot of a company or using the patient, like a doctor and a patient. It's like when the patient goes in the doctor's office, the doctor does a quick snapshot, checks the patient's vital signs, heart rate, his pulse, his temperature, uh, blood pressure, things of that nature. That's what the fundamental analysis of a stock. That's what you're checking of the company. You're checking the company to make sure it's profitable. Yeah, so as I said, I got my notes tonight. Like I say, my first couple podcasts, I was all over the place, but from here on out, we gonna make it, people. Work with me. But yeah, fundamental analysis, that's the process of looking at a business at the most basic or fundamental financial level. Which is why it's called fundamental analysis, because you're getting to the fundamentals. Now, this type of analysis examines the key ratios of a business to determine its financial health. And these ratios, I'm gonna get into the next podcast. See, this right here is like a two-part podcast. The first part, I'm gonna go through the basics of the fundamental analysis, and then the next part, I'm gonna turn it up a little bit. We're gonna go over the ratios and how to get to those ratios. But I promise these ratios are really simple. As I always say, it's only hard to you now because you've never seen it before. Once you get these ratios and you incorporate them in your trading plan, you're coming to see these ratios are really easy. Yeah, man. So back to what I was saying, fundamental analysis can also give you an idea of the value of a company's stock. For instance, if a company has relatively strong fundamentals, but its stock is trending at a low price, that's known as a value stock because the fundamentals of the company are strong, so it's obviously a good company to invest in. Just that the price right now is currently low for whatever reasons. But again, once you understand the fundamental analysis, you will be able to find value stocks pretty easy. Now, when you check the data, the first thing to check is the earnings. Matter of fact, that's the first and that's the most important thing to check is the earnings. Because the earnings is the quickest way to answer the most important question of fundamental analysis. And what is that question, people? Is that company making money? That is the most important question of fundamental analysis. People may want to trade for any other reason, but that is the pure reason, the base reason why people invest for fundamental analysis. Is the company profitable, or will it be profitable in the future? Because it pretty much defeats the purpose to sink money in a dying investment. That's like jumping on a burning ship. Is pretty pointless. You should always do that analysis. So we're gonna go about this. How to read a financial statement. Okay, so a balance sheet is in essence, it's a financial snapshot of a company in a specific moment of time. Most of the time, the balance sheet's at the end of the fiscal year, and it is generally brought up for each quarter. So basically, at the end of the fiscal year, they update the balance sheet, and then every quarter, which every 3 months, they update it again. So you look at a company, you could be looking at 5 different balance sheets, each one for each quarter, and then one for the whole fiscal year. Now, you wonder why it's called a balance sheet? It's called a balance sheet because the left and right side is supposed to balance out the assets and liabilities. The assets on the left, the liabilities on the right. Once you go through there and you go through the numbers, it should balance out. Hence the term balance sheet. Okay, let's not make it harder than what it is. Now, the left side shows all the assets or what the company owns at the exact moment. Whereas the right side shows all the liabilities, what the company owes at that exact moment, plus the money that's been put up by the owner to keep the money in business, which is the shareholder equity. Again, the left side of the balance sheet will show the assets, which is all the materials, the products, the land, the buildings. That's everything that the company owns. Whereas the right side is the liabilities, which shows everything that the company owes. So, that's pretty much the base part of the earnings sheet. We can go in so much more in depth, but pretty much it's like common math. If a company has more assets than liabilities, they're gonna have profit. They're gonna have a net profit. Likewise, if a company has more liabilities than assets, they're gonna have a net. Well, they're gonna owe money. Actually, there's not gonna be any net or growth. They're gonna owe money because they got more liabilities than assets. Okay, now continue on. Retain earnings. See, this is what my screen share. For some reason, my screen share does not work. So I would advise you to go to Google and type in balance sheet and go to images. And everything I'm saying, Google image, there's an image on Google. You can go down line for line. And also, if you have any questions, I always say this is an interactive show. Type in your questions, and I can answer the questions. But until we get questions, I'm gonna continue on. Retired earnings on the I'm sorry, retained earnings on the balance sheet is where you put the money the company has earned and put back in the business and not paid out in dividends. So the retained earnings would be like if Apple dropped a new iPhone and they take the earnings from the iPhone and they put that back in the business to do R&D for the next iPhone. That's retained earnings because the company made a profit, but instead of paying out the dividends, pardon me, with the camera, I always get nervous. They put the money back into the company. So that's retained earnings because they earned the money, but they retained it. See, people, most of these words in the market, they're pretty much self-explanatory. Eddie Francillion, what would you do with $100,000? Well, that's not really my lesson tonight. My lesson tonight is how to read a financial statement. But once I get done with that lesson, I would tell you what to do. But as I said before, I can't just tell you a certain stock because I'm not looking at the stock per se. So you will want to invest in the mutual funds. Okay. And my guess is here, my man the Cannon, the giant midget. What's up, Cannon? How you doing today, baby?
What up, blood?
All
Here.
right, so now we back to my fundamental analysis. Now the second part is the income statement or the profit loss statement. Shows how a business during a certain period, whether it's the fiscal year or a quarter, that is the sales and the cost. Fifth part is the total revenue. It's also called the top line because that's the top line of the statement. That is the top line on the asset side of the statement. The total
Yeah.
revenue of the company. Yeah. So Cannon, you got any questions about the operating income? What the operating income of a company is?
I got a lot of questions about what the operating income of a company is.
All right, that's great, man.
First
Because
off, what is it? Second of all, how do you calculate that?
all right, the operating income of a company is the figure that represents how much it costs to operate the company. Like again, a lot of these words and definitions in the financial field, they're kind of self-explanatory. So the operating income is the income needed to operate the company. Now, different companies, of course, obviously have higher operating incomes. I would venture, this is off the top of my head, I'm not even looking at a balance sheet, but I would venture that the operating income of Apple will probably be more than the operating income of Staples. Or Google has a higher operating income than Publix,
Yahoo.
so the operating income and then the next line of that would be the net income. Now, the net income, that's kind of self-explanatory. It's like your net paycheck after you pay the
Right.
taxes. That's basically what the
Right.
net income is. It's to figure out the paying taxes and other accounting issues. That's how much you net. You
Right.
know, Mel, I got you on there, Candy. Can you see my screen share? Because my screen share is getting really, I don't understand why I'm not
No,
screen
I
share.
just see you. It's no. I don't see any screen share. Are you
All right,
sharing the screen?
I'm about to now.
All
Can you
right.
see it now? No?
No.
What's wrong with my screen checker, brother? Maybe this way. How about now? Because I got what I want you people to see on here, but you guys can't see it. No, you still can't see it.
No. Let me see if I screen share if that shows you anything. Does that show you anything when I share when I
Oh,
screen
here,
share?
here it go. How about now? Can you see it now?
Yeah.
All right, I was doing the
Yeah.
wrong button. I apologize, people. Haha. let me
Ah, what are you?
let me back in action. Now, as you see on this right here, this left side is the assets. This is all the things that the company owes. So the property, equipment, the land, the buildings, investments, the inventory.
Can you blow that? Are you able to blow that up some?
Um,
Probably not, huh?
um, let me see F11. Uh-uh. Is that small? Now
Yeah,
on
it
the
kind of is. Kind of
okay,
can't make out what it
well,
says.
okay, well, I
But just
mean,
use the cursor and just point to it and tell us what it says, or you know what
yeah,
I mean. Just point to,
that's what
you
I'm
know what
doing.
you're doing.
Yeah. So on the as I said previously, the left side of the screen, or the left side of this balance sheet, like I said, the first thing it's called a balance sheet because the left and the right side it should even out. As you guys see, total liabilities and equity 472,100. Total assets $472,100. This is a perfectly balanced company. This is matter of fact. See, that's how you know
What
this is an example because most companies' balance sheet not perfectly balanced like this.
what company is that?
No, this is just it's an example. It's
Oh, it's
for
an
the
example. Oh, okay, all
yeah.
right, gotcha.
It's not a real company because again, very rarely do
Right.
you see a company balance sheet become completely balanced, man. Most of the time, they either have a surplus of assets or they have a bunch of liabilities. And as we
Okay,
said before, the right side, you see all the different liabilities. Accounts payable, which is money owed. Notes payable. All this is just money owed. Pretty much.
right.
This is fancy ways of saying they owe money. Long-term debts.
Yeah.
Okay, then coming here, this is the stock. See, stock is a liability to a company because you're selling the shares and you owe that money. When a person wants to cash in their shares, you have to pay that cash out. So that's why stock will always be a liability. It will always come as a liability. It's never an asset.
Mm-hmm. You got a question on there.
Oh, I'm sorry, I didn't because I'm on the screen share. I have to go back. Yes.
Somebody asked,
Yeah, Sean. It says this balance sheet reports every quarter. Yes, Sean. It can be every quarter or at the end of the fiscal year. Like, so there. In essence, there's five balance sheets. There's one after every quarter, and then there's the one at the end of the fiscal year, which carries all four quarters. Yes, it actually updates every quarter. Yes, because yeah, because
uh-huh,
the business that you did last quarter, you might not have did this quarter. So that's why it updates every quarter. And that right
that
there, I'm
makes
glad you asked
sense.
me that question. I'm glad you asked me that question. You guys ever hear when it says the stock didn't meet its quarterly expectations?
Uh-huh.
That's what Wall Street means because it didn't meet its quarterly expectations. So probably for the previous quarter, they expected to have more assets or more sales, and they didn't meet those expectations, which caused the price of the stock to fall. So that was a great question. So that's how fundamental analysis is very important. That's like, well, as I can't stress this enough. For someone as a day trader as myself, fundamental analysis is too much information. But for the majority of people I talk to, they're long-term swing traders or they're long-term investors. So I would always recommend do your fundamental analysis. I cannot pound that in your head enough. Do not just buy stocks. And this is fundamental analysis is for the people who always ask me. Like Eddie, he just asked me, what would I put $100,000 into? do your fundamental analysis, and you will find the perfect stocks. Like I say, I day trade. I stick to the price movements and other things. But don't worry,
Right.
we're getting to the technical analysis. That's the next two podcasts. See, everything is going to go in a coherent line. At the end game of this is for all of us to sit down to make our daily watch list and trade it. But until we build up until that point, we have to go through these lessons. Now, back on the screen share,
That's actually a dope vision too, right there, though, bro. Like what you just said, that
that's the
everybody's
end
just
game.
sharing their financial analysis.
That's the end game. After all these podcast lessons, we're gonna do a podcast during the morning. We're gonna do one from 8 to 11, and we're gonna day trade this podcast. But until we get to that point, we have to build up to people have enough information. I wouldn't feel comfortable throwing you guys at the wolves. I just wouldn't. I wouldn't be doing no one a service. I'll be doing everyone
Right.
a disservice
Real
actually
quick.
for throwing you guys to the wolves. Back to my screen share. So as we went through this, again, an income statement, a business income statement, also called a profit and loss statement. Of course, the revenues. You guys can see we went over this. So I really don't want
Mhm.
to re regurgitate what I just said because you guys can really see what I said and you can read up on it yourself. But I wanted to give you
And they can refer back to the video too.
refer back to the video, yes, and also, but one thing I always remind you guys: liquidity. You will hear me say this: day trading or long term trading. Liquidity, liquidity, liquidity. You want to make sure that your company has enough liquidity shares.
Hey, let's hold up. What is liquidity? So
Hmm.
I think I know what that is. Let me sound smart for a second. Can I sound smart real quick? That's like that's like the cash that you can actually get your hands on right now.
Facts. My man, the kidding. Facts. Matter of fact, I'm glad you brought that up because a lot of people need to learn the difference between liquid assets and illiquid assets. A house is not a liquid asset because you have
No,
to go through a long term to sell that shit.
you know
Uh,
what? A house isn't an asset at all,
at all.
really.
Hey, but let's stay on track.
You're
This
right.
is a whole
My
different
bad. My bad. My
a
bad.
whole different thing. But like stocks and bonds, those are liquid assets because you're able to cash them in immediately to get the cash immediately. Whereas selling like jewelry or selling art or selling things like that, man, you got to go through a long process. So that's not liquid. That's illiquid assets. All right, Cannon. Yeah,
Mhm.
okay, my brother, my good brother. But
Oh.
yes, yes,
Hmm.
but what else? Yes, liquid assets. Also, efficiency. By comparing the income statement to the balance sheet, you can measure how efficient the business uses its asset, which means pretty much you can just see how well it uses its assets to generate revenue, which pretty much means is how does it use its cash on hand to make more cash. Because always remember, the goal of the game is to make cash for everybody involved. It's for you as an investor, it's for the company itself, it's for the shareholders. It's just the game of Wall Street. I'm sorry, the name of the game of Wall Street is to make cash. That's what it is. So if it's not making revenue, it's not profitable. So therefore, you shouldn't do it. That is the base level of fundamental analysis. Because again, when you get to the fundamentals, you get down to the bare level, bare bones. So when you check the fundamentals, you checking the company, man. It's not up top. You checking down low. You getting down in the dirt, grizzle.
Oh, Dad.
And like I say,
Oh,
it's these ratios that I have that I don't want to go over just yet because that's the next podcast, the ratios. So I'm not gonna go over the ratios, but what I'm gonna do, I'm gonna give you an appetite. I'm gonna give you a little something, give you people to do some homework on. I'm sorry. Sean, it says assets they can cash out. Yes, exactly. Assets that's easy to cash out. Eddie, it says,
Yeah.
so did you go about it
Without
annually?
having a, but not even just cash out. Like, all right, when I think of cash out, like you gotta, in order to get your like cash value out of your life insurance, you got to cash that out. Or like in order to turn an investment into actual money, you have to cash it out.
Yes.
Liquidity is like money that you can just go get right now.
Yeah, right now it's easy. It's easy to get. It's like easy to access.
Yeah,
And it says
yeah. So
Eddie.
that's what it, like a checking account. A checking account is liquid. That's your liquid capital. Your checking account is your liquid capital. Now you might have a business that has a potential of generating, say, 100,000, 200,000 in a year, but that's not liquid capital. Or you might have a business that has like 100,000 in it, but you got to go through certain channels to even get to that money. That's not really liquid capital. Liquid is like you can go get it right now. You need it, you can go get it right now.
Yeah, access it. Bada boom. You know, Eddie, he said, would you go about it annually or quarterly on the statements? That's a good question. You would all right, so you would go by the time frame is in. You so at the beginning of the fiscal year, you want to go by the annually question, the annually statement. Okay. But Sean, I see a question. Hold on. Back to Eddie. But after each quarter, you want to stick to the quarterly earnings. But the annually takes the big picture. So you always want to keep the big picture in mind. All right. Always look at the big picture and use the quarterly. I'm sorry. Oh, Tiffany Pelzer Hills equity. We already
Liquidity.
answered that. That's what we answered. But if you miss what that is, my man Cannon can give that again. Can you explain to her that again?
Well, liquidity. All right, so I'm gonna answer both of these at the same damn time, using Sean's example. He said, "But like a boat isn't liquid." So going back to what I was kind of jumping in and jumping the gun on him with, where I was saying a house isn't an asset. A lot of people look at a house as an asset. They look at a car as an asset. A boat isn't an asset either. It's a liability because it's taking money out of your pocket, not putting it into your pocket. Now, if you're flipping houses, you flip cars, you flip boats, then that's an actual asset, not a liability. But at the end of the day, it's not really liquid because it still has it's more of a potential. You have a potential with that money that you can make off of flipping that boat or off of flipping that house or off of flipping that car. So liquid capital, just to make it real simple and short, just think of your checking account. Your checking account is like your liquid capital. That's your liquid capital, your checking account, because you know you can go to the ATM right now and go get that money right now. You know what I mean? Like you can go get that right now. So that's what liquidity is, pretty much.
Okay, and I have some examples. And I figured out how to work the screen share. I'm new money now, baby. New money. All
Good.
right. Li- Liquidity. All right. Right here. What is liquidity? As my friend just said, my co-host, is assets that you're able to get. So you see, if you can, so you guys can see my screen, right? What is liquidity? Assets, cash, exchanged easily and quickly. As my friend has constantly said, it's things that you can easily get. Go to the ATM, withdraw, call your stockbroker,
Right.
say sell these shares immediately. I need the money, or your bonds or something. Now, as we keep going down, we see what are liquid assets. As I just said, bonds, stocks, mutual funds, currencies, just things that you can call and sell. Non-liquid assets, on the other hand, art, furniture, antiques, real estate. Now, they are assets, but they're slow-moving assets. Here's a good thing to think of: liquidity. Stuff that moves fast. Just think of liquidity, because in the stock market itself, liquidity means shares that's constantly moving, and non-liquidity means shares that can't move. So just think of this as easily fast-moving assets, slow-moving assets. You see liquidity and non-liquidity. That's like another way to look at it.
Yep. Right now or later. That's how you look at it. Right now
Yes,
or later.
yeah, pretty much. Now or later. I'm
You
sorry.
can get out, that's liquid. If you
Yes,
gotta wait to get it, that's not.
Yeah, that's pretty. Hey, pretty much. That's pretty much it. All right, people. So we 25 minutes in. At this time, we got a new thing for y'all. Since last night, we did that tip for NVAX about the coronavirus vaccination. Now, I gotta preface this with saying I'm not a financial advisor. My man, the Canon, we're not financial advisors. So, um, don't take our advice. What have you? You might want to do your own research in this. But as we left, we did the research on NVAX. So let me go ahead and Google that. This I cannot stress this enough, people. Coronavirus vaccination is going to receive a lot of funding from the federal government. So anybody out there who keep asking me, "Oh man, what stocks do I want to look for?" or any stocks to look for, I cannot stress this enough. Stocks that deal with coronavirus vaccination, what you should go for. Hold on, Sean. So all non-liquid assets factor as liabilities? No, they're still
No, no,
assets. They're just
yeah,
slow moving assets. That's all.
yeah.
It's just can't tell them. That's
It's
your
just
person.
that you can't get it right now. All right. Uh, let's say like was something that you got that you're invested. I don't know. All right. Is that you guys familiar with life insurance, cash value on your life insurance policy? Or are you familiar with like, all right, 401k? A 401k, I guess that might be, no, that probably wouldn't count as liquid because you still got to cash it out.
You got to cash, and it takes time, and then they always want to send you penalties and shit, and tax you.
Yeah, so that's not really liquid. So
Yeah,
that's an example. A 401k is an asset because that is something that's yours that you can fall back on at some point, but it's not a liquid asset. Now you can cash it out and you can get it within what does it take to get your 401k after
couple
you cash
weeks.
it out? What, like a couple days? What is it, like a week or so? 7
Yeah,
business days, something like that. So yeah, you can cash it out, but I don't think a 401k counts as liquid assets because you got to still wait for you. Like liquid assets. Okay, this is where I learned the term liquid too as well. I talked to a New York Life guy, and he was saying how like he got he was pointing out how much New York Life was worth. I think they were worth like 30 billion or something. I can't remember exactly, but he was saying how like liquid capital they have 300 billion or no, like 3 billion. So he was saying like that means if we cashed out today, we paid all our debts, we did all we things and we had to do to cash out, we'd have 3 billion dollars just liquid capital, like 3 billion that we can get our hands on right now if we wanted to. So the liquid capital is like money that you got that you can grab now, like a savings account. That would be liquid. Savings account's liquid. Checking account is liquid because you can just go grab it. You don't have to go through the channels of
yeah.
reinvesting or like how, like say, I don't know how it is when you cash out on stocks or whatever, but stocks wouldn't be liquid capital,
No, stocks are liquid capital, my friend. As
are
soon
they?
as I
Okay.
sell my stock, the money's back in my account.
Oh,
You know?
okay. So
Yeah,
yeah, in
stocks.
that
Yeah,
case,
that's
then
liquid.
that's liquid
Yeah.
because you don't have to wait for it. That's something that
Land.
you can go get now.
See, land, real estate, that's illiquid because it's a long ass process to sell a house. You gotta go, you know
Exactly.
what I mean? I like so it is an asset to have land, but it's not a liquid asset. Okay, now back to our this is our thing we're gonna do every night, people. We're gonna stick to this. Everybody always want to ask me what stock to invest in, and I tell them go to mutual funds. But if you guys want to invest in a stock, I cannot emphasize coronavirus vaccination. So going back to my screen share, and I like to thank my man Hershey Rodriguez for this too. Like I say, I wasn't even on this lane. I'm a day trader. He kind of put me on this. So my man
But
Hershey, thank you.
here's the
So
thing about the mutual fund too. Oh, my bad. Go ahead.
like as we see here, these four companies right here are in the top tier of COVID-19 vaccinations. So you got Novex, which is stock symbol NVAX. Johnson and Johnson, stock symbol JNJ. Sanofi SA, stock symbol SNY. And Moderna, and that symbol is further up here. Where's it at? mRNA. Okay, now these four companies are the top tier coronavirus vaccination. So the smart money would say that one of these four companies are going to see. Well, shit. NVAX just received a $400 million grant, a $500 million grant, right? The other three companies they have other grants too, but my thing is one of those four companies would be a great thing to do your fundamental analysis, things that we just went over. One of those four companies, you would check this, then you would see that one of those four companies is gonna. I would guess that one of those four companies, because they're in the driver's seat for Corona funding, as it says right there on my top picture. CPR funding speaks volumes about coronavirus development. I mean, they sent these people $500 million, people, $500 million. So those four companies and the biotech stock sector, because we're in a bear run actually. The market's in a Dow trend, but the biotech stocks are actually in an upward trend because I cannot stress this enough. The federal government is just throwing money to biotech companies for this coronavirus. So for everyone who keeps asking me about what stocks to trade in, I don't like giving out stock tips. I really don't because I cannot emphasize this enough. You gotta do your homework. But so the people that want a little tip, those are four companies that I'm giving you to invest. Not I'm sorry, no. Not invest in. To do your homework to see if they're good investments. To call your financial advisor to see if you should invest in those four companies. And again,
I got I got
Moderna,
say. Uh-huh.
mRNA, Johnson and Johnson, J&J, Novex, NVAX, and Sanofi SA, SNY. Those are four companies that you guys out there should invest in. Oh, no,
Uh-huh.
not invest. Don't say invest. You guys should do your research on to see if these companies are good investments. But like I say, possible risk. Well, I mean, Sean, the possible risk of any company is
Hey, put that in the
that
car.
we're especially companies that's waiting on a drug in the pipeline. So maybe that they don't get the drug, maybe somebody else get the drug. So if you're spending on that, that could be a risk of the company. You say Johnson and Johnson all day. We had this
Put it in
talk
the
yesterday, good brother. They're already $149. See, me personally, I would have went to NVAX because it already jumped up 70%, good brother. It jumped up 78% higher than what it was. That means it pretty much gaps, good brother. Johnson and Johnson is $149 a share. I cannot emphasize that enough. Don't get me wrong. This room
you
is a
know
growth. I'm sorry.
what I was gonna say is a lot of people are now I'm not just saying this because be quiet. I'm not saying this just because I work in life insurance. I'm saying this because it is one of the more safer. Like if you are a person that's looking for a way to invest in something, like all right, you say mutual funds. Yeah, mutual funds is something that people can invest in. But one thing you got to worry about at with mutual funds, a lot of people will end up investing in the same mutual funds that are connected to the same investment vehicle, and it's
That's a
not really
good.
diversifying. And you're kind of just buying the same thing over and over again. It's kind of like buying the same Jordans, thinking you're gonna get a different payoff from the same pair of Jordans.
Hey,
Now,
that was a topic for the other podcast about mutual funds. We're kind of on.
quiet.
We're kind of talking about this coronavirus vaccination. That's where we're on now.
Well, yeah, but I'm just saying, like when you say like you were saying like mutual funds is something good to invest in for folks that if they just want to get in something and they don't know what to do that. which ain't a bad idea because that's what a lot of financial advisors actually tell people.
Yeah.
Here's some life insurance and here's this mutual fund. Now, Warren Buffett, he told his own family um, pretty much, hey, y'all don't know stocks like I do, and unless you learn stocks like I do, you should invest in IULs, Index Universal Life Insurance, because that guarantees a certain a return. Not only does it guarantee a certain return, but you also get a life insurance policy attached to it that has cash value.
But yeah, hey, Sean, as you say, definitely looking at NVAX. I would take that. Okay, so now this is me speaking. Okay, this is not no one else. This is my personal opinion. I would personally go for NVAX over Johnson and Johnson for the simple fact that NVAX is only $43, and it gapped up 78%, and it's still only $43. Whereas Johnson and Johnson is what, good brother? It's $147 a share. All right. See, this is something else. See, this right here, this is kind of technical analysis, but this is one thing I want you to see. The 52-week range, all right? So the 52 weeks is the year. That's a year. You see that the yearly high is $157. So Johnson and Johnson only has $10 to reach before it hits the yearly high. Now we're in a downtrend. So now we was in the bull market. I would I would be comfortable with it being close to the yearly high because if it's in the bull market, it would eventually bust through the yearly high. But we're in a bear market. I wouldn't be too confident about it reaching 157. Now, maybe again, if they got if they get some funding from the coronavirus vaccination, I would invest. But I would put them on the back burner and put Novex on the front burner because I cannot stress this enough. It's only 43.74. That is a lot of room for play around. Or you can go to any, like I say, what is this? Sanofi, that's $48. That's these you got to think these are all the top tier companies. Same with Johnson and Johnson, Novex, Moderna, and Sanofi. But Novex is 43.74. Sanofi is 48.31. Moderna is what? It is 65.18, whereas Johnson and Johnson is 147. So, good brother, I would not. I don't want to stop anyone from investing. Like I always say this. I say this a million times. Do your own research. Call your own financial advisor. But the information that I'm giving you, this is just a framework for you to build on. So don't just base it off of this. But you guys ask me for questions, and that would be my answer. Out of those four, J&J would be the last one. It's the most expensive. It has the least room to grow compared to the other three. Eddie, what do you think about Dover? Like Dover, what stock? Like shares the Dover company? I'm not. Sean, the companies that don't find a vaccine, do you think they could possibly take a? No, no, not really, because their stock isn't tied to the vaccine. Like those companies are already doing other things. The vaccination is just extra. So a company that could probably take a loss compared doing that if it was a company specifically for coronavirus vaccination. That was the whole reason that the company was founded. That would be a company that I would be hesitant to invest in if it didn't get the treatment because its whole bottom line is based on finding coronavirus treatment. Okay. All right, people. We about 40 minutes in. I know y'all tired of hearing us talk. You know, it's Trader. It's your boy Trader Die with my man Tony C. the Cannon. And you guys already know what it's hitting for. Let me get the theme music ready. But yeah, fellas, that's all it is, man. Trader Die. That's what we do every night. So tomorrow we're gonna do part 2 of fundamental analysis. I'm gonna start talking about the ratios. Now these ratios, I'm gonna give you just a appetite water. The price earning ratio, which is the PE ratio. You might want to write that down so we can come with some questions tomorrow. The EPS, the earnings per share ratio. Those are the 2 most important. I'm gonna just give you those 2. Other 3, I'm gonna throw in a lesson tomorrow. But tomorrow is fundamental analysis part 2. All right, it's your boy Trader Die with my man Tony C. the Cannon. You know what I mean? Hey Sean, no problems. What we do, baby? Financial freedom. Fire your boss. People learn to trade. That's all we do, baby. Always remember that. Hey, people, why does the Cannon look so mean? Man, he looks so mean out there, Cannon. We gonna
What?
make it, good brother. Man, you look so mean on the screen.
All right, I'm out of here.